I'm Bridget Stomberg.
And I'm Lisa D. Simone.
And this is Taxes for the Masses.
Today's episode welcomes Lauren Laricchio from Tax Notes to discuss challenges taxpayers are facing in obtaining information from the IRS.
Budget cuts, layoffs, and resignations at the IRS will likely lead to some negative consequences, including reduced tax revenue collections, fewer audits, and a reduction in taxpayer services. In today's episode, we welcome Lauren Laricchio, investigations editor at Tax Notes, to discuss another potential and perhaps less known consequence, a decrease in transparency for taxpayers. Hello, Lisa.
Hello, B.
We are talking about the IRS today, again. So I'm going to say it seems like we're in a bit of an SSDD situation, if you know what I mean.
Yeah, so this happens a lot, but I do not, in fact, know what you mean.
Come on.
What is SSDD? Please explain yourself.
Well, I guess the PG version of it would be same stuff, different day.
Okay. All right, fair.
It's essentially, I guess, a lowbrow way of saying, here we go again.
Yeah.
And when it comes to the IRS, we know that they have been through a lot in recent years and recent months, and it seems like the hits just keep on coming.
They really, really do. Yes. Totally agree. It seems like every article I read lately about the IRS is about the IRS losing resources, whether those resources were earmarked for specific investments and activities or more open to be used however the IRS saw fit. It seems to be getting clawed back day after day.
I mean, yes. And I think it's interesting because it's just another example of how quickly things can change at the federal administrative level. So if our listeners...
I think we've seen that in the last few months. Yes.
Yes. Mm-hmm. And so, yeah, this is not the only example, but it's just another example because it was only 3 years ago. It seems like a long time ago, but it was just 3 short years ago in 2022 that the IRS was promised a budget infusion of over $80 billion over a 10-year period as part of the Inflation Reduction Act. And like you said, that's just getting clawed back.
Yeah, it was promised those funds. Those funds were intended to increase enforcement, improve technology, improve taxpayer services. Perhaps most importantly, the spending was likely to pay for itself, which we love, because when you give the IRS more money, it can actually go enforce things and it can collect more revenue.
That's 100% right. So by some estimates, the additional $80 billion in funding was expected to generate an additional $200 billion in incremental tax revenue. And so if you spend 80 to make 200, that's a net revenue increase of over $140 billion, which to me at least sounds like a win-win.
Yeah, sounds a lot more win-win than a tax cut that's supposed to pay for itself that actually will not.
Correct.
That $80 billion promise did not last very long.
No.
$1.4 billion was cut in 2023. Another $20.2 billion was cut in 2024, and then again in 2025. And there's more discussion of more cuts. So as a result, the IRS is left with less than half of its original Inflation Reduction Act funding so far.
So first went the funding and then went the workers. So in February of 2025, the IRS began laying off about 6,000 employees.
That's a lot.
It is a lot. And ironically, many of them had just been hired as part of this attempted revitalization that was supposed to be funded by the IRA. And in April of 2025, about 22,000 employees, again, a lot. A lot, resigned in response to offers by the Trump administration, which allowed workers to be placed on administrative leave through September. By some estimates, the IRS might lose approximately 1/3 of its workforce this year alone.
Now, help me out. These employees that the IRS is losing, these are the ones carrying guns, right?
Correct.
Who are going to come knock down our doors?
Yes. I don't even know what they were, but there was some gun that didn't exist that they were going to be knocking on small business owners' doors and just taking the stuff out of their house.
Yes. Okay, good. So what does this all mean for taxpayers in the U.S.? With IRS budget cuts, layoffs, and resignations, there could be a lot of negative consequences. For starters, lower tax collections. So, maybe listeners don't think that's such a bad thing. The thing is, in order to run the government, you need money. And if we're going to have a tax policy in place and I'm going to follow it and you're going to follow it, I like to think that everybody else is going to follow it too, but that doesn't happen without enforcement. It doesn't happen without collections.
So I actually have a paper with Michelle Nessa, Casey Schwab, and Aaron Towery, and we are trying to quantify exactly what you just said, right? If we reduce budget and we reduce enforcement, what's going to happen as a result of that? And we're just looking at corporate data, and we estimate that a $14 billion reduction to the total IRS budget is associated with a net loss of $3.5 billion in tax revenue. Okay, so you're going to say that actually works out. That math works out. But that $3.5 billion of lost revenue is just from the little group of large public companies in our sample.
Okay, so that's like corporate collections is like less than 10% of total tax revenue collections. And you're looking at like probably less than 10% of that corporate sample.
Exactly. We are looking at only large corporations. And so when we extrapolate those estimates to all large corporate taxpayers, not just the ones in our sample, we estimate lost collections of over $34 billion. So now we are in a position of losing money, right? Because that was a $14 billion total enforcement cut. Is going to lose about $34 billion of tax revenue, again, just from large corporate taxpayers, which you said is only a fraction of the total taxpayers in the United States. So that $34 billion that we're estimating is only it is a lower bound, as we like to say in research, of the estimated lost tax revenue because it doesn't consider audits of small corporations, flow-through entities like partnerships and S-corps, or individuals. And those are the chunks that make up the largest percentage of the tax revenue pie currently in the U.S.
Well, and it's also likely to be a lower bound because you're talking about lost tax revenues upon audit.
Yes, good point.
If the IRS audits fewer taxpayers or has fewer resources to conduct in-depth and rigorous audits, then of course there's going to be less additional tax assessed upon audit. And indirect yet related consequences is less upfront compliance with these tax laws to begin with.
You're absolutely right. So generally speaking, we have tons and tons of research that says taxpayers are more likely to comply with the tax laws when the threat of being caught is credible. And you know what, people, you don't even have to make this about taxes. You can make it about anything, right? If you have proctors in the classroom, students are less likely to cheat. If you let them take the exam home, they are more likely to cheat.
Right.
Speeding, theft, shoplifting, doesn't matter what it is. People are more likely to be non-compliant with laws when they think it's less likely that they're going to be caught. So as the threat of detection becomes less credible, let's say because the IRS has fewer agents and less money, then it is quite realistic to assume that taxpayers are going to become less likely to comply in the first place. And so you're right. We're only estimating lost revenue after you got caught or potentially caught doing something wrong. We aren't even able to enter the sphere of estimating how much tax revenue would be lost because people are doing crazy crap to begin with and never getting caught.
Yeah, and it doesn't have to be crazy crap. I mean, this is a conversation I end up having in the classroom all the time because I talk about what the tax law is and how to be compliant with it. And then I often get the question over issues that people think that nobody is actually paying attention to, like what are the chances I'm going to get caught? And so then we have to talk about audit rates and the audit lottery and all this sort of stuff. And it's not necessarily that my students are trying to be, super cheaters who engaging in tax fraud. And so it could be a small issue. It could be a small amount. But even that, if enough taxpayers do it, it adds up and we end up in a situation where we're just not collecting as much revenue. Yeah,
that's a great point. You don't have to be doing something wrong. It could be that you legitimately don't know what to do. And so you just err on the side of taking the position that's most advantageous to you, which is not necessarily like the letter of the law correct position, but it's still not anything fraudulent.
Right.
So the first pretty foreseeable consequence of reduced IRS resources is less tax revenue.
Yep.
The second, I'm going to say, also pretty foreseeable consequence of reduced IRS resources is a reduction in taxpayer services.
Agreed. Congress really started laying into the IRS's budget from 2011 to 2020, cutting it by about 20% after accounting for inflation. According to the Center on Budget and Policy Priorities, as many as 9 out of 10 taxpayer calls to the IRS went unanswered in 2021. Like nobody even picked up 90% of the calls. After getting some influx of cash from the Inflation Reduction Act, the agency was able to make some improvements, not just over the phone, but also by opening or reopening taxpayer assistance centers and upgrading its websites. I think there was even a chat bot at one point that people were talking about that used AI that was helpful for answering questions. But it's very likely now that the layoffs and resignations and the lack of funding generally are going to throw us back into that world where there's nobody to answer the phone.
That's correct, because you either need people to answer the phones or AI bots to answer the phones. But either way, those people want to get paid. Those bots, those bots want the money.
Sure.
And a third potential consequence of budget cuts and staff reductions, a lack of transparency between the IRS and taxpayers.
Say more things.
I will not say more things, but I am hopeful that our guest will.
Today, we welcome Lauren Laricchio, the investigations editor at Tax Notes. Lauren leads the Tax Notes investigations team, which examines state, federal, and international tax issues. She also reports on transparency issues for Tax Notes Today Federal. She is the recipient of regional awards from the American Society of Business Publication Editors for government coverage and for enterprise reporting, and was a 2017 Society of Professional Journalists DC Dateline Award finalist for investigative reporting. Before joining Tax Analysts in 2017, Lauren was a staff writer for the Baltimore Sun Media Group, where she covered education, breaking news, and community news. She holds a bachelor's degree in fine arts from the School of the Art Institute of Chicago and a master's degree in journalism from the University of Maryland, College Park. So Lauren, thank you so much for joining us today. Welcome to the pod.
Thank you for having me.
We were hoping you could start by telling us a little bit about how you became the investigations editor at Tax Notes. What is that? How did you get there? And what types of stories do you write and publish?
Sure. So I came to Tax Analyst in 2017 after I was working as a local news reporter in Maryland for several years. And while I was doing that, I was covering things like education and breaking news. So covering tax was a big change for me, but I've really grown to love it. When I first joined Tax Analyst, I was working as a reporter for a state publication, and I was filing a lot of public records requests to get information about what the government was up to. One issue I focused on was proposals for the Amazon HQ2 economic development project.
Sure, yeah.
That was a big one. Yeah.
And I was also looking at other economic development deals. And I wanted to know what types of tax incentives state and local governments were offering to Amazon and other companies. And so that led me to set up our investigations team, a group of reporters who use open records laws and other reporting techniques to get information about what the government is doing when it comes to tax administration and tax policy. And so, so we do a lot of in-depth reporting on state, federal, and international tax issues. And so the stories I publish are normally about government transparency and are from our tax-related investigations. And I also help guide editorial projects that I collaborate on with other reporters at Tax Notes.
Thank you for that. And your response is leading really nicely into our next question, because you've done some reporting on the IRS and FOIA requests specifically. And so I think you just referred to them as open information requests. Can you tell our readers a little bit about what a FOIA or an open information request is? And in particular, why would a taxpayer ever need to FOIA information from the IRS? Because we provide so much information to the IRS, so presumably we have it already. So I think our listeners would be particularly interested in understanding why a taxpayer would need to FOIA something from the IRS.
Sure. Well, a FOIA request, it's a way to get information from the federal government. Federal agencies are required to disclose any information requested under FOIA, which stands for the Freedom of Information Act.
Thank you.
Unless it falls under one of 9 exemptions for things like privacy, trade secrets, or law enforcement investigations. It's a tool that's often used by journalists to get information from federal agencies to help inform the public. But in the case of the IRS, a lot of the requests are on behalf of taxpayers involved in disputes with the IRS. For instance, when the IRS says a person owes a certain amount in taxes, but the person disagrees, the person might need access to records that the IRS has about them so they can make their case for why they don't owe the taxes the IRS says they do.
Okay, that makes sense. So it's almost like, what is the IRS using against me to make this tax assessment? And if I don't know that, then it's hard for me to challenge what they're saying.
Yeah, exactly.
So you've written some pieces that have highlighted the backlogs in FOIA requests at the IRS, and that those requests, that backlog is only expected to grow. Can you talk a bit about what is causing the big backlog and what does that mean for taxpayers?
Sure. So I did some research with my colleague, Amanda Athanassiou. And so we weren't able to find exactly why there's a backlog, but we think we may know a little bit more about why. So the backlog, it's not just at the IRS, it's at agencies across the federal government. It's been a problem for a while. And so one source told us that backlogs grew during the Trump administration because there was more interest in what the government was doing and there were more requests being filed. So data shows us that the backlog got even larger during the pandemic. And there was, I think you guys probably remember, there's a big paper backlog at the IRS during that time that it had to work through. So we can't pinpoint exactly what's causing the backlogs, but the data that we looked at shows us that the time it's taking the IRS to respond to FOIA requests has grown, despite the agency getting fewer requests over time. So the IRS has made some progress reducing those backlogs in the past couple of years, but with the federal job cuts happening, the IRS is expected to lose even more employees. And if some of those employees are in the Office of Privacy Governmental Liaison to Disclosure, which handles FOIA, there will be fewer employees there to respond to those requests and process them.
That makes sense. So next question has two parts. And so first, broadly speaking, how does the FOIA approval process work at the IRS? So how does the IRS determine whether or not they're going to give the taxpayer the information that they are requesting? I'll stop there and then I'll ask the second part.
Sure. So when you file a request, a FOIA request with the IRS, they have 20 days to respond or provide an explanation if additional time is needed to respond. You normally file an appeal if the IRS says it won't give you the records you're requesting, or the IRS says it doesn't have the records you're asking for, even if you're pretty sure they have them. So the appeals process allows members of the public to challenge a FOIA determination made by the IRS. The appeals office will evaluate your appeal and decide whether the IRS erred in its decision without litigation.
Yeah, so a follow-up question, is the appeals office also within the IRS, or is there like a separate agency that reviews FOIA requests and denials?
So the appeals office does fall under the IRS, so they're called Independent Office of Appeals. But I think, as we pointed out in our article, sometimes tax professionals don't believe they are independent enough when making decisions in the appeals process. So as Amanda pointed out in her article about this, an average of 93% of FOIA appeals processed between 2008 and 2024 were affirmed at the IRS, meaning the Independent Office of Appeals often agrees with FOIA determinations made by the IRS.
I think most people in America would be happy if their boss agreed with them 93% of the time. I know I personally would be happy if my boss agreed with me 93% of the time. So yeah, that seems like a high rate, and that's your inclination as well.
Yes. So Amanda found that the suspension rates at the IRS are significantly higher than those of agencies processing a similar number of FOIA administrative appeals, such as the Department of Homeland Security's Office of the General Counsel and U.S. Immigration and Customs Enforcement, which we also know as ICE.
Okay.
Yeah.
So one of the articles talks about a potential other way that taxpayers could get the information they need. It's called direct release. Can you tell us what that is?
Sure. So direct release is another way for taxpayers and the representatives to get information from the IRS without going through the time-consuming process of FOIA, which can take, months, sometimes years. So taxpayers can request open examination files from an examining agent under Section 6103E. A tax attorney that Amanda spoke with said, while it's an excellent mechanism in theory, in practice, it can be frustrating and time wasting because it lacks an enforcement mechanism like FOIA does.
Okay. Hard to believe that something to do with the IRS could be, what did you say, time consuming and frustrating? Is there anything else that you'd like to discuss on the subject of FOIA backlogs at the IRS?
Well, I mean, I think we're hopeful that this issue will get better. But, you know, with some of the cuts happening at the agency, we're not really sure, you know, that's going to happen. But we're definitely monitoring the issue and we'll be writing about it more. So you should definitely look at tax notes and read our articles. And yeah, we'll definitely have more for you on this.
Awesome. We look forward to reading that.
Thank you so much.
Thank you.
Okay, time for the good, the bad, and the ugly. And I will start with the good, from my perspective at least, and say this was not something that was on my radar at all. I didn't even realize that somebody would FOIA the IRS about their own information. So I learned something today, and I like learning. So that's a good thing.
Yeah, it was news to me as well. Not only why somebody would FOIA the IRS, but also the fact that the IRS, I guess, isn't very good at providing said requested information. Both of that was news to me.
And sadly, not surprising that, you know, when you take money and people away from an organization, they're not going to be able to do the things that they need to do, like respond to FOIA requests. So I guess the bad is that this is just yet another negative consequence of cutting IRS funding.
It is. And I'm glad that we have people in the media who are willing to investigate this issue, to actually pull the data, look at the data to understand the impact of cutting IRS funding in this particular area, which wasn't even on our radar. So I really admire Lauren Laricchio and Amanda Athanasiou for covering this issue. And I look forward to seeing what else they come up with and tracking this over time. Like now that they've got they've been able to dig their nails into it, like let's see what comes of it.
I'll say another bad thing here is that this is something that ultimately I think is going to potentially hurt taxpayers, right? So you might even lump this into like the taxpayer service part of the negative consequence of the budget cuts, because the example that she gave, which was really helpful to me, is if you get an assessment from the IRS that you weren't expecting or that you don't understand, yeah, you should be able to write to them and say, can you please explain to me why? It's almost like in the court of law, right? Like you have the right to see the evidence that the defense has against you or that the prosecution has against you. So I think this is something that's going to wind up potentially hurting taxpayers because, again, especially those who maybe didn't even know that what they were doing was going to be problematic or raise an issue, and you get a notice and you just want somebody to explain to you why you're getting the notice, what the data and the evidence behind the notice is, and if it's going to get denied. And then 93% of the times your appeal is going to get denied. It really does seem like it's going to potentially cause problems for some taxpayers here.
Yeah, for sure.
Ugly.
I mean, I'll get on my rant soapbox again, but like we hear all this talk of how tax cuts are going to pay for themselves, right? And nobody's talking about the fact that giving resources to the IRS more than pays for itself, despite one of those two things being true and one of those two things being false.
Right. We have research that shows that IRS funding pays for itself. I don't know why we want to ignore that. And it's not just one paper, it's several papers. Papers have said this forever. The IRS says it too, and it's all pointing at the same thing. So it's a situation, it's a space where we have lots of evidence that's consistently pointing to the same result. And I know I want to ignore it, but maybe I wish we wouldn't ignore it.
Yeah, I wish we wouldn't ignore it. The
other thing that I'm going to say, and I don't know what category this falls into, and I'm interested to hear what you have to say about this. We've done, you and I are IRS sympathizers, I think I would say. They're maybe not sympathizers, but like we want the IRS to function properly.
It sounds so bad when you say it like that. IRS sympathizers.
I know.
It's like, it sounds
empathizers,
like
we're
going to be arrested for sedition. I don't know.
I know. I'm trying to be very precise here. I think you and I both want a properly functioning tax enforcement body in the United States.
Yes.
Okay. What hurts my heart is we have done many episodes where we say that we want the IRS to have more funding, that they need more funding to do their job correctly. And then there are so many episodes we've also done where the IRS is just shooting themselves in the foot, like the charity scandal, the tax-exempt entity scandal. This 93% appeals approval rate, it feels like another instance of like, could you get out of your own way a little bit?
Yes.
Because, to your point about the journalists doing investigative work and really taking the time to dig in, it's a higher rate than other agencies like ICE and the Department of Homeland Security, where things are also highly confidential and sensitive, and they're even better with the appeals than the IRS is. It's like, could you do yourselves a little bit of a favor? I don't know. Am I making sense?
Yes. I think we're saying to the IRS, help us help you.
Yes, help us help you. Yes. Yes. Don't make it so easy for someone to want to come in and take all your money away from you.
Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.